All right, ladies and gentlemen, thank you so much for coming to this webinar. We have a special treat and a special guest for you today that is going to show you simply how to acquire or how to gain an extra $100,000 in capital for your small business or whatever idea of a business that you have. All right. I've been in the industry over 10 years. This is something that I've been looking for a long time because one of the major problems in our industry nationwide is most people don't have an extra $10,000, $20,000 sitting around in the bank. So that means if they want to grow their business or start a business, they need capital, and that is where we come in. So without further ado, I'm going to introduce my guest speaker, Thomas. Thomas, are you there, my friend?
Yes, sir, Mr. Hawkins. Thank you.
All right. So I'll let you take it away, my man. Go ahead and let everybody know who you are, and we'll get right into it.
Sounds good. Well, appreciate this opportunity, Mr. Hawkins. We're going to talk about a very important topic, whether it be for pre-launch, startup, or existing businesses, and introductions are embedded here. So I'm just going to go ahead and get started with our Access to Capital workshop. Now, I'll tell you that we often give this in person at chambers of commerce, co-working spaces, business associations, trade associations, and are always looking for others that are willing to go out and educate the message in their community. Let's start with the quote here that's on the screen that comes from the United States Small Business Administration, of which I worked for up until July 5th of last year, 2019. The quote is, "It costs money to start and operate a successful business. Funding your business is one of the first and most important financial choices most business owners make. How you choose to fund your business could affect your structure and how you run your business." So and you'll see in a moment, I have an MBA and have worked for the SBA, as I just referenced, but so often in the marketplace, what happens is people are told, well, you need a business plan, right? To be successful, you need a business plan. But I would argue, and I think it's supported maybe loosely here with this quote, is we should start with a capitalization plan. Because how in the world are we going to develop and implement a business plan if we don't have capital? So let's talk about how we might be able to provide access to capital. So we started back in 2016. We received our 501c3 designation from the IRS in September of 16. And we really started with a more simple message, which is how to help small businesses access capital off of their EIN. We'll call it business credit. We were asked to and joined the Money Smart Alliance. It was formed by the FDIC and it's promoted by the SBA. So that's really where we got our start back in 2016. However, what we learned is that business credit alone is not enough to be able to optimize access to capital. So we started ICS, Innovative Capital Strategies, last year in 2019, actually at the end of 2018. And so we are administering a grant that was given to us from BCLI to help small businesses do what we're talking about today. Now, when we put ICS together, we said, let's figure out how to do something that doesn't exist, how to put together a turnkey model that is universally applicable to any type of business, as long as it's in the industry, of course. So we pulled together SCORE mentors, SBDC advisors, business bankers to put together a very transparent 10-step process, which we'll be talking about today. So what we're going through is practical, regardless if someone's in the pre-launch stage, they have an idea, but they haven't yet implemented, in the startup period, or even for existing businesses, because nearly all small businesses want to need more capital to reach their potential. My background, I am a former SCORE mentor. So in the Dallas-Fort Worth market, I was a mentor and the workshop chair. So I was the guy responsible for conducting or organizing workshops of all topics, including access to capital. Coming out of graduate school, I worked for Deloitte and Touche, called Deloitte and Touche then, now just simply Deloitte. And so worked on large scale financial and capital raising programs. I was, as I mentioned a moment ago, until July 5th of 2019, employed full-time as a small business development center advisor. And you may be aware of SBDCs. They exist in communities across the country to help small businesses with planning and strategy. And in a small community in East Texas, we help small businesses raise over $30 million, conducted workshops. And so, frankly, a lot of what ICS does is a privatized version of what the SBDC does, but we do it quicker and I think a little bit better. But we'll talk about that. So I'm one of the co-founders of both ICS and BCLI, have been a full-time professor in business management and Tyler Junior College, and taught financial literacy, small business management, so forth. 2 graduate degrees, one in finance, one in strategic planning, undergraduate degree in accounting. So not a pat on the back, but I've been in this industry. I've worked with small businesses. I've owned small businesses. At age 27, I was hired as a CEO of a large medical group out of Houston, Texas. So this is very practical, and it may be a bit contrarian, but I don't think that anything that we're going to discuss is controversial. And we'll open it up for Q&A once we get through. So we'll hear your opinion. What are our learning objectives for today? We want to talk about how to use business credit to access capital without the use of personal credit. So we'll go through that. I think you'll really enjoy that. It may be a little bit different than what you thought, probably more powerful. We're going to go through and talk about common mistakes that we frequently see small businesses make that becomes a barrier from them being able to access capital. And then we'll wrap it up by talking about the grant subsidized program that I made reference to earlier. All right, so let's start with business credit. As I mentioned, we started with this back in 2016 with the 501c3. I believe that it's an underutilized and underappreciated source of capital. And I'll tell you why. So we're talking about accessing capital off the EIN of the business instead of off the social security number of the owner or owners. Well, why does this matter? Most small businesses fail when they're trying to get money to start or grow a business. We've all learned about the 3 C's, right? If you go to a bank and apply for a business loan, they're going to be looking for the 3 C's. Creditworthiness of the person, personal and business, cash flow, and collateral. Well, a lot of early stage businesses can't bring those 3 C's to the table. And that's why about 97% of small businesses are declined for business loans. So it's a problem. I don't want to say it's an epidemic, but it's a significant problem. But here's the truth, that just like if you wanted to go get a mortgage to buy a home or an auto loan to buy a car, there are underwriting criteria for each different type of business capital. And there's many different sources. So the key is to find the right type of capital and then understand what the underwriting criteria is, because if you're approved, they're wiring the money into your business account. If you don't meet the underwriting criteria, then you're declined. Now, when we get into business credit, which is just one type of capital for a small business. So what we're going to talk about is actual and true and very specific to this one source of capital. Because I mentioned different sources of capital have different underwriting criteria. In this learning objective, we're drilling into business credit specifically. Well, business credit is different in ways that you may not have appreciated. Number one, building business credit always works. And that's very valuable, right? Because there aren't many things in life that always works, but building business credit does. And secondly, it's even faster than building personal credit. And I'm going to show you some examples of that here in a moment. Secondly, what you may not have known, maybe you do, but most people don't, business credit is publicly visible. So unlike personal credit where you can't see mine, I can't see yours unless we give each other legal permission, authorization, right now we can pull up business credit reports on every one of your businesses. Now from that, it's it's a judgment that can be made. So in other words, your clients might pull your business credit to see if they want to do more work with you. Prospective clients might pull your business credit reports from like Dun & Bradstreet, Experian Business, and we'll talk more about that, to decide if they want to start trusting you to do business with you. And it's very likely that your competitors are pulling your business credit reports to have ammo to sell against you. So business credit, publicly visible, unlike personal credit. And then thirdly, and I'll show you examples of this, and I'm not advocating for it, it's just factual, it's the truth, is that your default position for business credit is negative. It makes you look very unstable. It makes you look like you're on the brink of going out of business. Well, if what we said in the second bullet is true, that this is publicly visible, we should care about this, right? This is for astute customers and clients and prospective clients. This is probably something that they're looking at in deciding to do business with you. And if you're going after Amazon contracts or Walmart contracts or many government contracts, they're pulling Dun & Bradstreet reports on your business. You may just not have realized it. So what is business credit? Well, business credit is credit obtained in the business's name, not in your name, not in the owner's name. And it's based upon the business's credit profile. So just because you started a business and maybe just because you've paid your bills on time, it does not automatically create a positive credit profile. Because if the vendors, if you will, that you do business with don't report to say Dun & Bradstreet, Experian Business, Equifax Business, then your credit profile looks bare and does not reflect the strength of your entity. So again, the credit is based in the business's name and based upon the business's ability to pay. And that's important because sometimes small business owners don't have such good credit, right? And if getting capital was dependent upon their personal credit, that might be a barrier. Chances are the business is at a clean slate. And again, I'll show you some examples of that in a moment. Now you might say, well, I don't know that this is really relevant, right? I've been around the block a time or two. I've never really cared about building my business credit. I'm going to dismiss it. Well, if your goal is to access capital, which of course is the topic for today, let's say that you want to go after an SBA loan. And again, I don't work for the SBA now, but I did up until July of last year. SBA loans are awesome, and some of them are very easy to get, and we'll go through that later in the presentation. Well, for instance, when you go pursue an SBA loan, they are looking at your business credit, not just your personal credit. They're actually looking at a different credit scoring algorithm called SBSS. And so if you've not paid attention to your business credit, you've not worked on optimizing it, you might be declined for an SBA loan for this reason alone. All right. Now, what's awesome, and I made reference to it earlier, is business credit is fast to build, and we can start accessing it immediately. And we'll show you some screenshots here in a moment. So in summary, having strong business credit is just a smart thing to have. I think it would be foolish for most businesses to dismiss this topic and not care about it. It's going to increase your borrowing ability. And again, that's what we're talking about today is access to capital. It's going to impact your approvals, the amount. So in other words, do you get approved at all? The amount of the approvals and even the terms you pay. And according to the SBA, the Small Business Administration, you can typically borrow 10 to 100 times more off of your business than you can individual. Pretty powerful. So let's look at an example, and I know this is a busy slide, but I'll interpret it for you. So this is one of the first clients we worked with back in 2016, and I suspect that just about every one of you on this webinar or the recording thereafter, this is about what your Experian business looks like. And essentially what it's showing is no activity. Haven't done anything right, haven't done anything wrong, just no trade lines reporting. Trade lines, of course, are extensions of credit. So you'd say, well, that's okay, right? No harm, no foul. There's just nothing there. Well, the way that the algorithms interpret that is that they give you an IntelliScore, which is the credit score terminology for Experian business, of a 28. That's a 28 on a 1 to 100 scale. 28 is not a good number. 28 is a very low number, isn't it? So our default position on business credit, if we do nothing, is we look bad to the outside world. But there's something interesting more that we should look at. Look at this credit limit recommendation right here. What does it say? $1,000. Now, isn't that interesting? Pause for a moment and say, you know, if I had a really poor personal credit score, let's say a 450 or a 499, what do you think the credit limit recommendation would be for me as a person? It would be about 0, right? But even with a 28 on a scale of 1 to 100, there's still a measurable credit limit recommendation being applied to my business. So that starts to give us a little bit of glimpse of, okay, there are some differences here, aren't there, from personal credit to business credit. We won't worry too much about this, but the bottom line is we are considered high risk. And so depending upon the business or the industry you're in, that could suggest that people wouldn't want to work with you. Now, what's the factor? It's not that we've been late pay, right? Because up here in this little screenshot, it hasn't said we've done anything wrong, but we just don't have any demonstrated proof that we'll pay bills that we agree to pay. There's a lack of active trade lines. All right, moving on. Now, let's say that we worked with a client and we just did one small step. We added just the first trade line, which is typically available in the first 24 to 48 hours. Well, just a simple net 30 account. And if you know anything about that, that just means you promise to pay the full amount in 30 days. It's not like a MasterCard or Visa. It's net 30 account. What impact did that have? Holy smokes. That took us from a 28 up to a 96. That's a lot better, isn't it? Just by showing one time that we'll pay bills on time. Now, also, let's look down here, and you can be a pessimist on me, but let's see the glass is half full. By making just one payment, one time, we've more than doubled our access to capital. Now the credit limit recommendation is $2,500. Wow. I mean, wouldn't it be great if we could have really bad personal credit, go get a secured credit card, make one payment, and then have great credit? Wouldn't that be awesome? We'd all do it. But business credit builds much quicker than personal credit. And it also lowered our risk score. All right, now every successful business has business credit. You may not have heard much about it because maybe it seemed irrelevant to you, but rather it's Facebook. They're running currently 40 different trade lines. Dell, 83 trade lines. Microsoft, 131. Apple, 138. And we get all the way up to Walmart, a whopping 513 trade lines. I realize that probably none of us on the webinar are currently as big as Walmart. But the bottom line is it probably makes sense to pay attention to what large successful businesses do and try to replicate that in our small businesses when applicable. This is applicable. So what's some key vocabulary? I told you, I didn't tell you, I used to be a high school economics teacher and then taught at the collegiate level. So let's do some vocab together, right? Dun & Bradstreet. Dun & Bradstreet is one of the largest, arguably the most important business credit bureaus. And so they have probably a profile for your business right now, because once you form an LLC, a C Corp or S Corp through your state or any other state, Secretary of State, then a profile is created. And so from D&B, you get a PAYDEX score. We've been talking about IntelliScores, which was for Experian Business, which is up next. But you have a PAYDEX score that's also on a 1 to 100 scale. Higher the better. We want to have 80 or better to look credible. Experian Business is what we were just looking at. There it's called an IntelliScore, again on a 1 to 100 basis. Does anyone know what DBT is? Because if you don't know what your business's DBT is, then I would argue that you may not really be managing your business as tightly as you should. DBT is days beyond term. So on average, do you pay your bills on time? If so, you would have a DBT of 0. On average, I pay 0 days late. That's what lenders would like to see, right? If they're going to give you credit, loan you money, give you a line of credit, whatever the structure of the capital may be, they'd really love to see that they can anticipate that you would pay them on time. So right now, your company, if it's an existing company, has a DBT, we can help you figure out what it is, but that makes a difference in terms of accessing capital. Trade lines we made reference to. So those are extensions of credit that report on your business credit bureaus. That could be getting a company car, that could be a loan, line of credit, business credit cards, what have you. Payment experiences are when we pay on those trade lines, and that kind of makes sense. But I will, and that's my attempt at an arrow there, but I will tell you that payment experiences are calculated differently on business credit than they are personal credit. And here's 2 examples of that. You must have at least 4 payment experiences reporting to even have a paydex score generated. Otherwise, it gives you a 0. And a 0 is bad, right? It's the lowest whole number. And then secondly, payment experiences are different with business credit than personal credit because you really only get credit one time per trade line. So let's say that for your business, you'd like to have a new automobile, car, truck, SUV, sports car, doesn't matter. But you want to have it in the business name so it's fully tax deductible, right? Because that's what the IRS says. If you're going to deduct, if you pay for if it's in the business name and you pay for it with business funds, it's pretty much not an argument, even if you're audited. It's a business vehicle. But if you drive a car that's entitled in your personal name and financed in your personal credit, then all of a sudden, well, what percent of its business use, what percent of its personal use, and all of a sudden it becomes a mixed use vehicle, and it's much harder to defend a fully tax deducted expense. So the point is, if we wanted to go get a business vehicle using business credit, we're going to have to establish about 15 trade lines to create 15 payment experiences. Now, it only takes about 5 to really build a good profile. So the point is, we'll work with you to determine what are your goals, what are you wanting to acquire with capital, and it might require a bigger effort that would require more trade lines and payment experiences. And then we saw some examples of credit limit recommendations, and so that's not a binding offer, but that gives guidance to the lender of how much you qualify for. And I'm going to show you some more examples. So let's go back, and this is the same screenshot we saw earlier, so no different. This is the baseline for just about every business, and we do this every day in our office. We have a young lady, she's a veteran, her name's Madison Hope, and that's her job. She pulls business credit, interprets it, and helps clients all day long. And I'll tell you that this is probably what your business credit profile looks like. Low score, which makes it high risk, and you have some access to capital, but typically not much. When we saw this one also a moment ago, so now we've added just 1 trade line. We are able to show that we pay our bills on time, so our risk went down and our credit limit recommendation went up. But let's say that we continued that process. We didn't just stop after 1 trade line, we kept working at it. What would happen? Well, you might want to sit down for this one, right? So we already had a low risk, so that has maintained in terms of our IntelliScore. Our financial stability is stronger, but oh my goodness, what happened to the credit limit recommendation? Almost $750,000 for your business by doing nothing else but us working together over a period of a few months to build out your business credit profile. What would it take individually to have a personal credit limit recommendation of $750,000? It's possible, but it would be difficult, right? So we said that business credit builds faster than personal credit, and we can access more capital by leveraging business credit. Here's some of that proof. So you might say, well, great. How do I build business credit? How does that specifically work? Well, what Madison's going to do first is make sure that your business is set up properly. Now, again, I'm going to caveat this. I told you earlier, different sources of capital have different underwriting criteria. So what we're talking about now isn't criteria that you'd have to meet for other types of capital, but it certainly is accurate for building business credit. Well, you cannot build business credit with a sole proprietorship, a partnership, or a DBA. It has to be a more structured entity, and it can be a nonprofit. So if we don't have that in place, we either need to not plan on using business credit or get that in place, right? And we can help you with that. Secondly, we have to have an EIN, and that's free and easy to get from the federal government, a unique identifier analogous to what social security numbers are for people. EINs are for businesses. Now, it starts to get a little bit more difficult here. You may operate from your home, but we can't build business credit with a residential address. We need to have a business address, and no, not a post office box. So there are co-working spaces and virtual offices, or you may need a, depending upon what your business needs are, a true physical office like we have here. But the bottom line is we need a business address on file that's consistently used with the federal government, state government, your bank, on your website, and so forth. Again, that doesn't restrict where you conduct business. You may operate in your pajamas from the back bedroom, but on file, we need to have a business address. Otherwise, you're considered very risky. We need to have a business phone number. Do we all have cell phones? Probably so. Do we use our cell phones a lot? So, but a cell phone number should not be listed as your official business number. We need to get a true business number, and then we'll help you list it with directory assistance. Then, so once the business itself is set up, we'll call that step one. Then what Madison's going to do, or you can do it yourself if you want, is make sure that your business credit profiles are set up properly. So we're going to pull your reports from Dun & Bradstreet and Experian Business and Equifax Business, see what's there. Almost always the profile is screwed up. What I mean by that is usually there'll be mistakes. Your industry code may not be right. You might say, well, why does that matter? It's a deal breaker in many cases, because if your industry code isn't loaded correctly, then they presume that your industry is high risk, and that can reduce your access to capital. Your address, your phone number, number of employees, revenue, all those things need to be set up properly. So don't misinterpret, say, oh, if this is a new business or I haven't started yet, I can't build business credit. No, but we need it to be, whatever the situation is, it needs to be accurate, because it usually doesn't go in our favor if it's inaccurate. Then at that point, we have got two different options for building business credit. Both of them are available. Now we're down here on 3, aren't we? Step 3. Our favorite, of course, is the fast track. The fast track is where we can typically raise about $100,000 of business credit in about a month, somewhere between 30 and 45 days. That is good stuff. Now, if you don't want to do fast track, we can do what's called organic. That's where we start with some net 30s, and then we do store revolving accounts like Dell and Sam's and so forth. And then we get into the big boy credit. So 2 ways to build business credit: fast track or organic. Now you might look at this and say, well, Tom, it looks pretty clear to me. I want to do that fast track. Well, the personal credit is used as a guarantee on fast track. So we'll say PG. Now it doesn't show, these trade lines don't show up in your personal credit, but there's a personal guarantee in the background. If you don't want to do a personal guarantee, then we do the organic build, the bottom. So let's look at a few examples. $7,000 of business credit from Visa. Here we have $10,000 from Bank of America. We can tell with their logo. Here we have American Express, $24,000. $50,000 from this source. I think it's another American Express. So the bottom line is business credit works. It's going to be able to allow you to access capital under the EIN without a personal guarantee. All right, so now we're down to the final learning objective, which is to talk about the Grant Subsidized Capital Ready program. We launched this December of 18, so just over a year ago, and it's wildly successful. We're enrolling clients from across the country, and I'll show you why. Well, what we do is we help pre-launch, startup, and existing businesses access capital to be able to start, grow, and reach their potential. And we talked about some of the barriers before of how it's not easy to do this. We can hop in our cars, we can drive around the community. There's banks and credit unions everywhere. We don't compete with them, but we help identify the right sources of capital based upon your mitigating circumstances, and then help you meet the underwriting criteria. We have banks that refer to us, and then we refer them back for funding, because we're not the lender, we're what's called TA, technical assistance. All right, and so as I mentioned a couple of times, and if you remember nothing else from our conversation, it's important to realize that the key to successful capital raise is twofold. Identify the right source of capital based upon your circumstances, and then meet the underwriting criteria. If you do that, you get approved, you get funded. All right, so what are some of the components of the Capital Ready program? So certainly we assign a finance officer like myself or one of my counterparts to work with you through this process. In most cases, we can at least get your first interim round of funding in the first 30 days. That's certainly our goal. We're going to put together a lender compliant business plan. All the time people say, oh, I already have a business plan. Well, great. Is it lender compliant? Is it what the lender wants to see? Different types of lenders have different requirements. And I'll be the first to tell you, some sources of capital, they don't even care about a business plan. But if we're going to go after a big bank loan or an SBA loan, they do. And we need to follow their requirements, because if we do, the box is checked. If not, there's an X placed next to it. We need to optimize your personal financial statement. Again, this is how you look on paper, and there's a little bit of an art to it that we'll help you with. Personal and business credit scores. We've talked a fair amount about business credit scores in the prior topic, so I won't go further there, but let's talk about personal credit for a moment. What are some things that could cause a small business owner to have not an optimized personal credit? Well, number one, maybe they've used too much of their current credit card, so their revolving utilization is too high. We have a bridge loan program where we'll literally pay off, or at least pay down, your credit cards. What happens? When you pay down your utilization, if it's above 30%, the scores go up and your access to capital increases. If we need to, we're not credit repair, but if we need to remove inquiries, we can do that. Too many inquiries in the past 6 to 12 months is a red flag and can be a barrier, even if your score is high. So we can help with the derogatory items that I just told you about. What about positive credit? Sometimes we don't pay enough attention, and when I teach financial literacy at the college, we talk about it's so important to build positive credit, because that's what shows that we pay on time. And so we can help add a mortgage trade line, primary mortgage, because that's one of the most credit-worthy trade lines you can have in our society. If you don't have some aged credit cards with perfect payment history, we can take new secured cards, literally change the start date, change the credit limit so they report as older, larger credit limits with perfect payment history. So very advanced strategies. Everything's legal and ethical. And another variable that impacts access to capital that is a common mistake, and we see this frequently, because we pull credit internally. We've gone through all the criteria, the background checks, the criminal checks, the credit checks. So we pull credit, soft pulls for our clients as we're going through this process, as well as business credit scores. And your verifiable income plays a very important part of getting access to capital. So you could have an 800 personal credit score, but a low verifiable income, and that's a barrier. We can literally create verifiable income. But let's move on. The point is we can help optimize both personal and business credit. Creating interim financial statements and financial projections. Normally we're going to project out 36 months. And then even developing your use of funds. This is kind of like your shopping list. If you're going to go to Sam's or Costco, right? You want to have your list of what you're going to buy. Well, if we're going to go raise capital, we need to figure out what are we going to spend it on, because that in itself could alter the type of capital that we pursue. But the bottom line is, and this may sound too good to be true, but if you think about it, it's really not. What we're going to do is guarantee at least $100,000 capital raise. That's the floor. That's not the ceiling. It's very possible that we could help you raise a whole lot more. The more you want, the better off we all are. But the bottom line is we have a written guarantee, because through these techniques, business credit alone, for example, we can always raise at least $100,000. So, well, let's talk about some of the most frequently used funding solutions, and we'll kind of wrap this up here in just a moment, open it up for questions. So SBA loans, again, the three of us that co-founded ICS all came from the SBA environment. There's different types of SBA loans. One of my favorites that we will often shoot for is a 7A Express loan. You can be a brand new startup, so there's no minimum time in business. People think, oh, I need 2 years in business to get an SBA loan. That's not true. SBA Express, notice the word express, means it's fast. In about 15 days, 150,000 funding is the max for a 7A Express, and really a relatively low credit score to qualify. We could do larger loans. The SBA will guarantee up to $5 million. So if we're going after real estate or equipment, collateralized assets versus more working capital, we can do the 504. Fast seed capital, there's different types of business loans that even with not so good credit, we can actually go down to a 575 FICO, personal credit score, for some of the accelerated funding sources. UBF is a really big deal. And that's where we were talking about business credit up to $100,000, around $100,000 in 30 days. And a lot of times we can get very low interest rate or even 0% interest for an initial period of time. Reports under the business credit profile, not on personal credit, and typically no collateral required for the UBF. So if we don't have a lot of assets yet, that's a perfect fit to get started. And there's other sources of funding. We're not a one-trick pony. We're doing more and more with private money for real estate, for example, as well as crowdfunding, 401k finance, and so forth. All right, so let's wrap it up with a quick Q&A, and then I'll turn it back over to Mr. Hawkins, and he'll be able to facilitate questions. So if we were live together, this would be more interactive, but I'll just kind of force our way through here. So what did we say makes a difference between business credit and personal credit? Did we say that business credit is publicly visible? Yes. Did we say that business credit increases faster, that it always works? Yes. We talked about why do most small business owners fail when they try to access capital? What's the number one reason? Well, it's really twofold. Usually they don't know what the right source or sources are based upon their specific circumstances. And secondly, they often don't meet the underwriting criteria. That's what we do. We find the right type of capital, help meet the underwriting criteria with a guaranteed $100,000 outcome. We talked about a number of new vocabulary terms: Dun & Bradstreet, PAYDEX, Experian Business, IntelliScores, DBT, trade lines, so forth. There's different types of SBA loans, S7A, typically working capital, 504, hard assets. Minimum personal credit score to qualify for a business loan as of today, and I mentioned it earlier, 575. Do you have to have a profitable existing business to get capital? No, we can be pre-launch. We can even be unprofitable. And then we talked about a number of things about properly setting up your business. Now, again, I'll repeat this one more time, and then we'll turn it back over to Mr. Hawkins. Different sources of capital have different underwriting criteria. So in our first learning objective, we talked about what it takes to build business credit. That is not a universally true statement for other sources of capital. So for example, we can go get you an SBA loan right now as a DBA. You don't even have to form an LLC, C Corp, or S Corp, but we can't build business credit with a DBA. So just keep that in mind. Different sources of capital have different underwriting criteria. That's why we need to figure out what you have in place to find the right type. All right, so with that, if we were in person, we'd have an evaluation form, and we're not in person, so we don't have an evaluation form. So what I'm going to do is turn it back to Mr. Hawkins to facilitate the Q&A. Mr. Hawkins.
I am here, Mr. Thomas, and thank you so much for that power-packed, presentation, my friend. I mean, every time I see this, I get excited all over again. And hopefully, all of you who are watching right now, you should have a better understanding of how to get funding for your business. And what better way to start your new year off with OPM, other people's money, to leverage your business into something that can really take off. Okay, so Thomas, thank you so much, sir. We appreciate you, guys.
Thank you. Have a good day.
Thanks for coming on. God bless. We'll talk to you guys soon.